Rupesh Shah, MD Corporate Affairs at Symphony, joins in right now to talk about how their performance has been. Thank you so much for taking the time out and joining us, Mr. Shah. You know, harsh summers clearly have managed to drive the sales up for you in the first quarter. Tell me, what's the demand trend now, given that it's been a strong monsoon, and what's the outlook for FY25?
No, so first and foremost, on account of series of initiatives what we had taken during and post-COVID, and on top of decent summer, this has been an outcome, and we see a huge runway in air cooler market, whether in the country or internationally. And considering climate change and heat wave being order of the day, we have also launched series of path breaking 17 new models, and many of them are also not only at a super premium level, but some of them are also at an entry level to take on some of the local players. And we have already done phenomenal job in terms of the rural and semi-urban market penetration, and there is a huge room further to improve on that. On top of D2C, where now our EBITDA margin is in line with the normal trade, and we are at a takeoff level considering the size and scale we have achieved. So I believe overall we are heading for a good time for the current year and down the line. And currently in Symphony India, as well as Mexico, Brazil, even trade inventory and company inventory is much lower than normal.
Mr. Shah, good morning. This is Vinny joining in the conversation as well. What I want to also talk about a bit is in terms of the industrial cooling business, because that had been a bit subdued in terms of performance over the last few quarters. What is a growth now there, if you could highlight a bit on that terms, and what is the expectation there? Is the worst behind here?
We believe so. Worst is behind us. Probably so far, we were on account of variety of reasons swimming beneath the water. It was underwater swimming. But we clearly knew that, and we were very much convinced that this is the product category which in the mind of many was short of redundant category. But we knew that there is a huge potential and lot can be done. And at a right time, we can really jump. So it was like a tiger underwater swimming, and now really jumping, and henceforth it can really run. So in various parameters, we have not only further cemented our market leadership, but we can do a lot.
And what about your margins as well? Because they have seen a marked improvement on a sequential basis as well as yearly. Is 21% an EBITDA margin level looking sustainable?
No, in fact, year as a whole, our EBITDA margin should be higher than that. Historically, our standalone EBITDA margin year as a whole used to be at about 31-32%. And normally in June quarter, EBITDA margin is much lower because that is the quarter during which advertisement, sales, promotion, and many other expenses are quite skewed. So in fact, we are targeting EBITDA margin better than this, not only at a standalone level, but at a console level, year as a whole. Otherwise, for June quarter, this has been the best ever EBITDA margin, but this is mainly on account of economies of scale and substantial growth in turnover, whereby many overheads remain fixed.
Share with us a level then, given that you're talking about an improvement, what's the level that's looking sustainable?
No, I won't like to give any specific number. Our aspiration is to reach to historical high, but more importantly at a console level.
Sure. Mr. Shah, obviously with the announcement of earnings also came in that, you forayed into those water heater segment, right? So one, how much is the market opportunity for the company over there? As well as in terms of what is your internal target that you're setting for yourself in this segment? What is it that synergy that one could expect in terms of top line from the segment in the next couple of years for Symphony?
So, considering our IR policy, we won't be in a position to give a specific guidance whether for ensuing quarter or year or thereafter. But I think we are heading towards very healthy growth and margin, not only in the country but internationally also. And as it can be observed, even IMCO Mexico, on top of very high base of previous year, has again come out with the record performance. GSK China, which was bleeding continuously, is now in black, and on top of it, out of 59 crore of loans and advances granted by Symphony India, 7 crore it has already repaid so far, and there is a clear visibility for further repayment. And on top of it, Symphony India and our international subsidiaries put together in respect of research and development, sales and marketing, etc., and even sourcing, many complementary strengths we have started already exploiting, and there is a further room to do that.
Mr. Shah, just a follow-up that I have on the water heater side. So, will you be using the same distribution channel as Symphony, and which area is this going to be coming in? Is it pan-India launch right now, or maybe just some specific geographies?
No, it will be launched in phased manner to start with specific geographies and also selected channel partners, and gradually it will be pan-India. So this will be initially just a launch year, and I think in 2-3 years time we should see a decent volume, not certainly in current year.
Okay, and just want to understand what is the margin profile that comes in from the water heater side, and is it similar to that we see in air coolers, or will this add furthermore to the margins? Is it margin accretive, or maybe a bit more of a decline, or how is the margin profile?
So in water heater, we are just launching it. So once we decide the pricing in consultation with the trade partners and internally, we will exactly come to know, but we will like to have a decent margin profile. But it's slightly premature to specifically talk about whether it will be in line with air cooler or not. But secondly, very clearly in year 1 or maybe in even year 2, initially top line will be lower, but advertisement, sales promotion, market launch, market network cost will be higher. So at EBITDA level, certainly it will be nothing to write about in year 1 or maybe partly in year 2 too.
Talk about your company has been more about the buyback pricing actually, and I have to talk about that. Why at such a high premium? I mean, do you think the company should be valued at the buyback price of 2,500 rupees?
So, number one, considering the recent performance down the line, the kind of the potential and the growth we see, and hence board of directors also compared the valuation of the company vis-a-vis peers in consumer durable and in totality, signaling what is the overall companies and board of directors outlook about the valuation. And obviously at this price, all shareholders also to a proportionate extent benefit.
Right, Mr. Shah, thank you so much for joining in with us this morning on ET Now. It's a pleasure having you on the show. Surely keeping an eye out on the foray into the water heater segment as well as air coolers. Expected to see a further growth, improvement in margins. Also about the 21% mark comfortably is what the company could watch out for in FY25. But ONGC